Awesome, mate. Ned Hunter. Thanks for joining.
Thanks, Matt. Where's Hunter come from?
It's we've just realised in the past 5 minutes that we actually live a stone's throw away from each other, which is I take full onus for that for not finding that out, mate. But we live very close to each other. But I, funnily enough, come across your content through social media, and had a synergy with sort of what I was doing in the sense of the boring businesses is just looking at exactly that, boring businesses in Australia that that people could work in. Most people would be able to work in,
Yep.
and you're in the lending, mortgage broking industry, and there's sort of a bit of a connection there. So I thought I would touch base, and I can ask you a few questions. So
Yeah, for sure, man.
give
Very
us
happy.
a bit of a background on yourself. You're obviously mortgage broker,
Mm,
probably a lot of houses. I
yes. Yep. I ended up here because my broker told me to leave real estate if I wasn't happy, which I was very unhappy in real estate, and
Yep.
join the inside. So it's all the good parts of real estate, none of the bad parts, which is what I found. So I
Right.
started at Aussie Home Loans, and anyone who's done their time at Aussie would know you're either there for 2 years and you leave, or you're there forever.
Yep.
So I did my 2 years, got out of there, and I've
Yep.
been running my own show now for literally 1 year, almost on the dot.
Wow.
Mm.
Congratulations
Thank
for
you.
taking the leap. Was your so you were in real estate sales originally?
Yes, I
Yep.
was.
Yep. And then so then you've transitioned over. Did you have to is it just getting a broking license, is that
Yeah,
a
it's
mortgage?
to be honest, the process would be relatively straightforward from any avenue, but the avenue that I took with Aussie, I think, was a bit more specific because they employ you for a training period, which was
Yep.
about 4 weeks at that time. Then you do your diploma as well. You can do your Cert 4 in finance and mortgage broking, but your
Yep.
Cert 4 will take you all the way to the end except for CBA. CBA is the only bank who requires you to get your diploma. So you can
Nice.
be a mortgage broker with your certificate, which only takes a week to get done if you wanted to. But if you want to get accredited for CBA, you have to have your diploma. So inevitably, every broker will have to get their diploma because inevitably at some point you will need CBA on the panel.
Yeah. Yep. No, well, congratulations. And then, I guess predominantly do you deal with real estate predominantly, or what sort of loans do you generally offer?
Yeah, still a lot of mortgages will still make
Yep.
up the bulk of my book, but still consumer finance, business finance,
Yep.
car loans, equipment loans. So yeah, the occasional business acquisition from time to time, the occasional commercial purchase from time to time as well. But I think given the nature of Cairns and its locale and the limitations of how much business is conducted here,
Yep.
there's not always that much to be done in this
Yeah.
region.
Yep. Do you have, like, I guess, like, do you work with many clients outside of Cairns or outside of where you live? Yep.
Yep, Townsville, Mount Isa, Sydney, Melbourne, a couple over in Perth, a few in Darwin. So
Yep.
yeah.
Yeah, nice. Matt, well, yeah, as I said, I appreciate you jumping on. I guess I sort of want to go through a bit of the story, or from, I guess, a start to finish point of view from a business lending point of view, given that's obviously my niche. And I, so day to day, I'm continually researching and looking at, just boring businesses around Australia that we can either start up or that we could purchase. And there's a lot in the news and whatnot now about boomers getting to that age where they're getting out of their businesses,
Mhm.
and sometimes they're unsexy businesses that people may not want to be run, but when you actually look at the numbers, they are quite attractive and can be quite a good business to look at.
Absolutely. It's funny you say that because that's how I spend some of my spare time too.
Yeah, well, great. We'll have to, maybe we will definitely run another podcast. We'll do it in person next time. That's for sure. But so when people come to you, what is the very initial process of buying a business from a lending point of view? So what would what would I, if I me I'm looking if I was looking to purchase a business, what specifically would I need to look at, like in terms of my own finances, cash
Yeah.
amounts, some of the due diligence and that sort of thing up front?
Yeah, for sure. So there are the main pillars that you'll have with this with anything. Normally, I would start with your what we consider your character or your profile, which is if you're a plumber and you're wanting to purchase a restaurant, we've got a wall there straight up. So
Yeah.
your profile is basically, is this a business that you've worked in before or operated before or had any experience in whatsoever? Is it completely new? Is it a completely is it adjacent industry possible? Are you a supplier and now you're moving into the installer, something like that?
Yeah.
It all depends on how those bits and pieces fit together. So that's one aspect. The other is obviously when it comes to business acquisitions, how we're going to structure the loan. And borrowing for them is a very different kettle of fish than your standard residential lending. That's just a plain black and white. If it fits the box, great. If it doesn't, no. This is a little bit more wishy-washy because there's other ways you can sort of approach that situation. So getting finance for it, typically people will draw equity from their home if they've got it. If not, and it's going to be an unsecured business finance, normally you need about 50% deposits. So if you're purchasing a business 500 grand, you're going to need that 250 cash. Or you can substitute some of that for some vendor finance, which is obviously the seller is going to have a loan agreement with you to finance or basically make repayments to them through the cash flow of the business over the next 2 to 3 years.
Yeah. Yeah. Perfect. Okay. So yeah, that's a great little segue. So we've got option one is looking to use equity in your home, or not option one. An option is to use equity in your home. Another
Yeah.
option is to, if you don't have the equity, to actually do an unsecured loan.
Yes.
But that requires a lot bigger deposit up front, and presumably interest rate would be higher on that unsecured
Yes.
loan.
Yeah, always. And look, to be honest, if we can for any business purchase, if we can fund the entire thing through drawing the equity of your home loan, that's I would still say that option one for sure. If you've got that option, go for that every time.
Yeah, yeah. Is the interest rate generally on a home, if you've got that equity, comparable to a home loan, or are the business loans higher in that scenario?
Yeah, a business loan will typically always be higher, but
Yep.
so when you're purchasing a business, you're purchasing goodwill, you might be purchasing stock, and you might be purchasing a shadow mortgage or a vehicle or some equipment with that as well. And so what you're actually financing is structured between those each different bits and pieces. So for the goodwill might be the unsecured lending part, and there might be $100,000 of lending there. The problem with unsecured lending is such a high risk. They don't want to push that over any longer terms. So you might only be looking at 5, 6, or 7 years for unsecured lending, and you might be on 7 or 8%, which isn't that bad. But on that short term, the cash flow is tight. So if you've got the equity in your property where you can draw on that and you can spread that at 25, 30 years, then the cash flow is a lot more comfortable in that perspective. And especially in those first couple of years, acquiring a business, assuming it's going to be a little bit of time before it's running up properly.
Yeah, yeah, yeah. So yeah, so a secured loan using the equity in your property you'll be able to get a 25, 30-year loan as well, similar to a.
Yeah, for sure. And look, this is definitely a gray area, and I love to teeter on the edge of gray, as most
Right.
brokers do.
We
But
love that.
if you go to the bank and you say, and then I'll say this is the one of the greatest advantages of having a broker over going to the bank. If you go to the bank and you say, "Hey, I want to buy a business and I want to use my home equity to do that," see ya. That's it. The purpose of what you're drawing on your equity of your home loan for has to be within the parameters that they deem acceptable. And usually a business acquisition is commercial, it's not residential. If you're buying another investment property, if you're consolidating your own consumer debt, all those things are A-OK. But if you're trying to buy a business, they do not like that at all. So you got to get creative with what you're looking to do there. So I've just had a client, we literally financed a blinds business. So his mate was selling it up, and we just took $200,000 straight out of his home loan. The purpose for the bank was we're going to do some renovations on the property. Super gray area, super gray area. But I will say that because that's the best way to get it done. And the fact is, I've called that bank and I've had a chat to that bank manager, and I said, "This is what we're looking to do." And she goes, "Just say that it's for renovations." And this is a game that they're playing. They know the game. We know the game. We all know how it's unfolding. They've got rules. They want to stick by those rules, but everyone likes to teeter around. And we know this guy's acquiring a business where the profit's $300,000. There's no stock, or it's all pretty much shipped in and everything. The risk is super, super low because he's a handyman and he's a fully qualified fitter and turner and all these sorts of things as well.
Yeah.
So when all those bits and pieces stack up, everyone likes to make the deal happen. But if this guy was, a waiter at a restaurant and he's like, this great opportunity just came up to buy this blinds business. I've never installed anything before in my life. I don't know the difference between a Phillips head and a flathead.
Yeah.
It doesn't look good. And
Yeah.
we don't want to put our force behind that. But for the right people and for the right scenario where something looks good, you bet. We'll always
Yeah.
back.
Yeah. In terms of let's say if we're talking fully secured, would you be looking for a cash deposit as well?
Uh,
Or are we able to borrow 100% of the business?
Yeah, technically speaking, you can. Yeah, so you can still borrow for 100% of the business via either, drawing on the equity of your property and then using that as the deposit essentially, and then borrowing the remainder as whatever it is going to be. So
Yeah.
that's still fine. 100% lends are doable. And I've had and seen cases of particular industries and particular people will get um, different advantages. So I've seen doctors get 100% funding for a restaurant.
Right.
And you're like, okay.
Yeah. 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 Yeah.
But it's how it pans out sometimes. And there are people in those professions because doctors, historically speaking, perform better with their repayments than a lot of other professions.
Yeah.
So, even with home loans, they've got special offers that no one else has. So
Yeah.
they've got enough data, I think, there to suggest that doctors are excellent at taking
Yeah.
on debt, managing that debt, and doing with it what they will. So, you know, there is that. So if you're a doctor, the chances are you've probably got a very better chance at getting finance than a lot of other people.
Yep. That makes sense. I'm sure there would be other professions probably in
Yeah,
that,
there
and,
are.
and
Yeah.
and other professions that would not be even close to being in that situation.
Most
But
certainly. Yes.
yeah, the if I've got if I have $300,000 equity in my home, are you lending 100% of that, or are we looking at like a sort of a LVR on that as well,
Yes. So there
the
is an
actual equity
LVR.
component?
The LVR is also going to be bank specific, right?
Right.
So typically when you're doing a cash out or if you're drawing on equity in your property, you're capped at 80% of the property value. A lot of banks will cap it at 80%. So if your property is valued at 750,000, the max you can borrow is up to 600,000. So if you still owe 500, then you just deduct 500 from that 80% cap, which is 600. You've got $100,000 equity that you can draw on.
Yeah.
There are still cases and other banks that can let you go further than that. Obviously, as soon as you go over that 80% LVR tier, you're in lender's mortgage insurance, and then you can only hit usually about 88% of the property value, and then the remaining 2% is going to be lender's mortgage insurance capitalized onto the home loan to bring you to about 90%.
Yeah.
Yeah.
Yeah. Due diligence on a business that you're purchasing. So is that something that you personally would look at, or the bank? You might be looking at it preemptively before the bank obviously would look at it.
Yeah, look, to an extent, and it will depend also on what the business is. So one of the big due diligence factors is customer concentration. So, if you're a supplier and you're supplying, solar panels or something to the installers, but you've got one client that's 50% of your business, you've
Yeah.
got a high risk of concentration. And
Mhm.
then that will absolutely come into play from the lender's perspective because they're basically going to say, well, if this client disappears or if they go to another supplier, then you're losing 50% of your business just like that.
Yeah.
So yes, the due diligence will come into play is that they want to get valuations and all of if it's equipment and stuff like that, they want to make sure that the value is there and that what you're not overpaying or anything like that as well. So if you're buying a nice Isuzu truck or something like that, but you're not financing it for $60,000 if it's only worth 30, because they still have LVR metrics that they're going to take on those assets as well.
Yeah.
So yes, the due diligence does make a big part, and I would say also your legal team in the acquisition of the purchase is going to be a huge part of making sure that your due diligence gets done as well.
Yeah. So you're saying if we're buying a blinds business is a good example, you probably have a vehicle of some sort. There would be stock. There would be goodwill. Uh, you know, either rent or potentially premises. But let's just assume they're renting. So the bank would do an actual valuation on the vehicle, and I guess the stock is probably a little bit more difficult. But if there's other
Yeah.
equipment in there that would be of sizable value, they would
Yeah.
be looking at that actually having a
Yeah.
valuer check that.
Yeah, for sure. And then it's there's a bit of cross-referencing you've got to look at between that and what's also showing on the balance sheet, because the balance sheet shows your stock on hand and all those other bits and pieces. It's making sure that all of those things stack up.
Yeah,
But you know what, this is a pretty interesting one because this guy running this blinds business, he actually didn't have any financials at all.
right.
And he didn't have a zero or any invoicing system. He would do his invoices manually on a Word document. And this comes back to the boomers, right? Running these businesses that are really, really well, but their processes and the systems in place are not what they should be. And
Mm,
this guy's biggest hassle has been since taking up the business is implementing all these things, like even a website, or even if you Google the name of the blinds business, it doesn't even come up. But this guy's got so much business just because the referrals and he's doing, the retirement villages that are going in and he's got these big contracts and he's got long-standing relationships with people. That would have been nearly impossible to finance. It would have been pretty much impossible to finance without having all that stuff actually in place because there was nothing there. It was pretty much invisible. So, the way we got it done was certainly an alternative route in getting it done, but we got it done nonetheless.
yeah, therein lies the problem and the opportunity.
For sure. Opportunity, I would say, yes, absolutely, massively, massively. Because yeah, I think they can be out of touch with what's available now with
Yeah,
even with the AI tools and just other stuff to implement into your business. Like scaling is all about the process.
yeah,
Once you build that up, it's the process handles everything from there.
exactly. Yep. Nah, I couldn't agree more. I guess, yeah, you're getting towards retirement age. You've got more business than you can handle. What's the point?
They don't care. They don't care. The money's still coming in, and they've got those relationships and everything, and they're just not that fast. And I
Yeah,
get it.
100%.
It makes sense, but 100% there is the opportunity in that because when you're going to make an offer and you're talking to them, you're like, man, there's no systems in place. You've got something of a bartering tool, I think.
Yeah, yeah. With the um, with the taking security over a property, or taking a mortgage over a property for a business loan, how
Yep.
does that work in this, I guess, in the sense of there's already a mortgage most likely over the property just from with the actual house mortgage, and then is there an additional security that's taking over from a business point of view, or how does that work?
Yeah, so if you're putting up your property as collateral, then typically what that might look like is, for example, if you're wanting to purchase e-commerce business and every bank says no except for Westpac, and you've got your home loan over here with ANZ. Westpac says, yeah, absolutely, we can finance this deal. We can see you've got enough equity in your property. We can see you've got 200,000 that we can draw on. There's another 200,000 required to complete the purchase price. They're going to refinance that home loan. They're going to take that over to Westpac. So whatever remaining balance you've got there on your existing home loan, that's going to remain the same. The additional amount that's drawn out will still come through as whatever it's going to be structured to finance the rest, if that makes sense.
Yeah,
So you can draw out that portion, that 200,000 as a home loan, and then the other 200,000 is going to be split between the goodwill, any assets, or an overdraft, potentially anything like that. So the facilities are determined by what comes along with the purchase price.
right. Gotcha.
Yeah.
The just to clarify, so you said I should have went on this before, but so a car, goodwill, and stock. There would be one loan for all of those items, or do they separate it?
Yeah, so those ones would typically be split. And
Right.
and there's advantages in doing that because the goodwill is obviously the highest risk part, and so that unsecured lending because you're lending against goodwill. There's not a lot of physical asset there. Once it
Yeah.
goes down, it goes down. You can't really recuperate that. So they'll try to lend as much as they can against other assets, and you can even use the other assets as leverage as well. So for example, if you've got a truck that's valued at say $100,000 as part of the business acquisition.
Yeah.
Typically, the financing for assets is usually about up to 120 to 150% LVR, which means if the truck's valued at 100, they can actually lend up to 150. So the advantage in trying to max out the debt against the truck versus the goodwill is the truck is an asset-backed security, and you will have better rates on that facility, potentially longer terms as well. So cash flow would be better. The more you can lend against an asset or security versus the unsecured, the better.
Yeah. And so if you're lending 150%, that's effectively like just cash for you to be able to, for the business.
Yeah, correct. Yeah, and this it's in other senses for businesses looking for cap raise, like capital raise, they're just wanting cash and they've
Yeah.
got assets and they don't want to do an unsecured business lend or cash flow lending. We can use an asset. We just go to the bank and say, hey, we've got this truck that we own outright. We want to borrow 150% LVR. We just want cash for business. We want to manage our cash flow. We've got some big invoices coming up. We're expecting, some delay in payments over the next couple of months. That's absolutely fine. It's completely within the realm of their
Yeah.
acceptable
Yeah.
lending.
Yeah. And that, I guess, yeah, that's a good one. That leads into my next question. So a business will need, just capital to run day to day. So if a business is worth 300,000 and that's just for the goodwill, the assets, the stock, would a loan typically look at maybe 350,000 to have that additional cash there for business expenses?
Yeah, almost always. Sometimes because they're accounting for the fact that there's going to be some legal fees and other things involved with the business acquisition as well. So,
Yeah.
yes, they once they know what the purchase price is, they're assuming that you're walking into something that's, going to have invoices due the next day.
Yeah.
Like it's going to be straight away. They know that no one's holding off because you're taking over the business. Everything is still going to be moving. So yes, they can look at overdrafts or even just as the unsecured lending just to give you that cash buffer for a couple of months, maybe even for a little bit longer. But that is an absolutely vital part of it because if they're going to be financing the business for you, they're not going to finance you for the absolute bare minimum and then be
No.
like, well, good luck.
Yeah.
They want to make sure that the business is going to stay afloat so that you can hold on and continue to make the repayments and get everything back to the bank as well.
Yeah. Okay. Yeah. That's good to know. I did not know that. When the actual settlement of the business occurs, there's a lot of moving parts. Like when I first purchased my first property, I thought that was stressful, but I think like looking at now looking at this and just hearing from you now about different loans for different parts of the business is something I wasn't aware of. What's the actual settlement sort of time frame and how does it look?
Yeah, that's
Give us the. I'm sure you could talk to this for 20 minutes.
yeah. Look, this one is a funny one, because it can vary so much
Yeah.
that it's crazy. Like I've seen some deals go on for a year,
Right.
18 months, stuff like that. But obviously these are larger transactions. For the smaller stuff, for the most part, once it's financed and everything goes through, to be honest, it's a little bit between them and their solicitors and how all that sort of stuff unfolds. So for the most part, I don't really see what it's like for them as they go through that process. I mean, after we financed the blind business for that guy, it was sort of just like, hey man, I've got the money, I've paid them. He's given me his phone number, he's given me access to his website and all this sort of stuff. And meanwhile, in the background, I don't know, I don't know if he's actually got, anything on paper or anything in writing that says, yes, I will give you my phone, I will give you access to my emails or any of that sort of stuff. So yeah, the
Yeah.
funny part about that question is I've never seen that real whole process of settlement,
Yeah.
like deep with my hands in it and like
Yeah. Yeah.
watching it all unfold. But yeah, it's interesting.
Well, I think that speaks to probably the complexity of it in that like your particular component is clearly vital, but also a big part of it. But it's also just only one part of the actual whole process of
Yeah.
solicitors, mortgage broker, doing your due diligence, pre-approval. I'm just like there's so many parts of it that are quite complex.
Yeah, for sure. And you know what? There are people out there, and there's a guy that I follow on Instagram, and he's kind of like a buyer's agent, but for businesses. But and he's there to help guide you through that process because he does it. He's done it many times before, and I watch all of his videos, and even that to me is always an educational piece. And I'm watching him, and there's some really fascinating stuff. And he talks about the businesses that he thinks you should buy, things that sort of run themselves that you can have on the back end, or he looks for small, cheap businesses, but there's multiple of them around the area that you can sort of consolidate them all into one, pick them all up and own that area. So yeah, it's something to be learnt as
Yeah.
well. And I think even if you spend 20 minutes going through this guy's page or anyone else's, you will learn so much that
Yeah.
I think you'll have the confidence going into it a lot more.
Yeah. With the you finance, so business one gets financed. You're in it for 2, 3 years. Things are starting to run smoothly. Do do people then use their business to potentially fund further acquisitions?
Yep, yep, for sure.
Yep.
So once usually you've been in the business for 12 months, that's the starting point. There
Yep.
are banks that can do less length than that. So you're looking at really second, third tier lenders that would do that. But once you've hit 12, that's the starting point. Once you've been in the business for 2 years, you're golden. Every bank will start considering you once you've been in business for 2 years. So whether that be cash flow lending or even if you're looking to purchase property outside of the business or in your personal name, all
Yep.
that stuff becomes available after the first year. But yeah, they only normally look, depending on what it is, at the last 6 months of your business transactions as well. So if you're wanting a cash flow lend or something, it's usually a 5 times multiple of what your monthly incomings is.
Right.
Yeah. So if you want to borrow $500,000 for some cash flow lending, your monthly income is going to need to be about 100 at least. Actually, it might be somewhere 2 to 3 times your monthly. Actually, so if you're earning $100,000 of revenue from the business, your maximum cash flow might only be about 200 to 250. I think that's
Okay.
actually fine. Yeah.
Yep. Yep. Uh, Man, I think I've covered. It was a short and sharp one. I really just am. I think I'm quite interested to maybe dig into some additional items maybe in the future. As I said, in person.
Yeah, sure.
So yeah, thanks for jumping on, mate. I
Thank you. Yeah.
short, sharp session.
Nice.
I've learnt a heap out of this already. There was plenty of little things I wasn't aware of. So
Yeah, it's the funny intricacies that sort
it
of get,
is.
yeah, and these ones are always like the commercial and the business lending. It sits in such a different realm, it's cowboy stuff,
Yeah,
it's hot, it's fast shooting, it's like it's wild,
yeah, we
and
love that.
there is no clear sort of credit policy on a lot of these things. If you go for a home loan, I can go into my back end of Commonwealth or Westpac and I can pull up the credit policy, and this is the Bible. This is what Westpac and CBA says. We will lend you money if you fit this box.
Yeah,
But in the business lending, those things don't really exist. You can ask them that question, like, yeah, we've got a rough idea of what we
yeah,
like,
yeah,
don't like, but those things will change from one month to the next. They can be, oh, we're really into e-commerce businesses right now, but if they've got a lot of that business already, and they've got a high risk profile, then they've got a high concentration of e-commerce businesses, and they start to think, oh, maybe we better stop doing that. And you see
love it.
that in fields everywhere. I mean, you probably would have heard of Macquarie with their trust lending,
Yep,
the trust lending loophole. And I remember saying, as about 6 months before, this is on the back end. I was like, there is no way that Macquarie is going to be keep doing this for the next year.
yep,
And lo and behold, they've done so much trust listing. They're like, holy moly, we've got, 500 people with thousands of properties between them. It's pretty high risk, you know.
yeah,
They just cut it out like that. It was just gone overnight.
yeah.
No preemptive anything. We just woke up, checked emails, and Macquarie says we are not doing trust lending anymore.
Well,
And that's how quick it can change. So, there's advantage in that too. Because one day I had a deal and we were stumped. We were
Yep,
completely and utterly stumped. And then the next day, the bank said, oh, well, our policy on that yesterday was different. Today, it's better. We'll do this deal for you.
yep,
And you got to stay on top of those things too, because they come out of nowhere.
yeah,
But the good banks and the good relationships you have, they'll call you up and they say, hey, just wanted to let you know we've got the following changes coming in the next couple of days. So if you've got any deals that might fit these parameters, send them our way. That depends on how hungry they are for business too.
yeah. I guess the if there's enough demand for a certain product, or then that they can change. But also, if there's enough risk there,
Yeah.
they will just cut it.
Yeah, hands down, sometimes there is simply enough demand. So I've seen some pretty highly questionable deals that I didn't do that I've heard of some people doing that some banks just were like, yeah, we'll do that. We'll do that.
Yeah,
And you're like, that is
crazy. Yeah.
no, no. But it's hilarious because when they're hungry for it, they just make it work.
Yeah.
So you can use that to your advantage too.
I think the one learning among the many learnings I've got from you today, but one learning is there's not a world where you could not have a broker to assist you with the purchase of a business. I mean, of course, you could go alone or directly to a bank, but those prior relationships for you guys with your different banks is
Yeah, but,
you
it
would be
is. It is.
naive not to
Yeah.
do your due diligence there.
Yeah. Yeah. And look, seriously, there have even been cases where, if I've had a deal coming through a business acquisition and it's so complex and it's
Yeah,
so full on that, even I've got my contacts higher up, other brokers that I know do commercial stuff that I go, hey man, this is
yeah,
some really, really hardcore stuff, as I'm going to have to hand it over to you. But at the end of the day, that person's still getting a broker. They're
yeah,
still getting the top level service that they could possibly get because I'm not going to try and do a deal if it's going to be fumbled or if I don't have the right accreditation with the right bank or whatever it's going to be.
yeah,
You can't risk that. You just can't risk that for the client. And it looks so bad if you even try to attempt it and the whole thing fumbles because with the business costs, man, there is a lot to be lost.
yeah,
Your home loan contracts, you don't get finance approved. Everyone just goes, meh, you get your money back and you move on, you find the next one. But I had a guy only recently, he's trying to purchase a little dock and a little dock with a cafe and it's got fuel like on a marina like this. And this is what they consider a specialty asset where every bank looks
yeah,
at what the heck is that? We don't want anything to do with that.
yeah, yeah,
And he had bypassed his finance course, right? He told his lawyers, he's like, don't worry, I'll get finance, no worries at all. Just tell everyone that we can bypass the finance clause.
wow.
That was a disaster because he could not get finance. And he was calling out, he's like, we got $50,000 worth of legal fees at risk here, and they're going to come after us if we don't get this approved. And at
What
that
do you
point, you're
do?
like, mate, you're shooting you in the foot, you know?
Yeah,
And maybe if he had gone to someone in the first place before, going through that whole process, he would have been saved.
yeah.
But yeah, that was a grim one.
That's crazy, mate. I'm sure there's plenty of curveballs that come at you with that. It's a bit makes you think a fair bit more
But
when
yeah,
they come
yeah, I
across your
think,
desk.
if, like you said, I mean, like the lesson is talk to someone first,
Yeah,
you know, like as someone who's in the game a little bit, even if it's going to be a lawyer first or a broker first, or
yeah,
someone who is doing content on business acquisitions, anything you can gather before taking this track,
yeah,
because it's not like your standard financing. It's not
yeah,
done in 30 days.
yeah. No, well, appreciate your time very much, Ned. I'll make sure the business is linked and plugged and whatnot in the show description. But thank you. Definitely keen to chat again, mate.
Awesome.
Extremely informative, and yeah, I'm very thankful.
Thank you very much, Darcy. Appreciate it.
No worries. We'll speak soon.
All right, lovely. Thanks, mate.
See you, mate. Bye.